Hello and welcome to another video from the Trader Guy, and this is going to be something a little bit different, and I will start doing these from time to time as my schedule permits. Occasionally something will happen during the day that catches my attention, and I'll try to get these out as quick as possible so that they may be somewhat actionable, or at least can give you some food for thought on the currency markets. Uh, Please remember that all of my videos are in high definition, so if you are viewing this directly from a YouTube player or some YouTube page, you can also expand it. It is high def, so you can see it's recorded in 720p. Anyways, having said that, today saw this is September 15th. Today saw a coordinated effort by the central banks to increase dollar funding liquidity. And in a nutshell, this basically allows banks in Europe to borrow US dollars at a cheaper rate than they would from each other. This is an area that an entire book could be written about, but what we're interested in is how does this affect the Forex market? You can see that the euro dollar, this is the daily chart, has risen quite a bit during the day. But what I have found interesting is that we had a shot straight up, and if you look at it from a daily perspective, you can see that this bar here was basically where we completely came undone once we broke that support, and the exact number is about 138.38, but for simplicity's sake, we'll call it about 150. You can see that once we broke through that, that's when we really fell down, and we went all the way to 135. You'll notice that I have 500 pip lines on here. I don't have a ton of lines on this chart because I try to keep it as simple as possible. I want to know where the trend is, and I want to know where the major support and resistance is. The beauty of some of these pairs is that typically they will follow the 500 pip mark. When I set up my charts, this is the very first thing I do is put in lines every 500 pips, see if they match. 95% of the time they do. And then I look to see if there's anything more important or just as important on the chart and add it. So that's essentially what you're looking at here. We've had this straight shot up, and as I zoom in on the time frames, you can see, keep it in mind that our former support turn resistance or whatever is about here, and that's pretty much where we've ended up. This is very interesting as it shows we shot up well above the 139 level, right at about 135 or 39.50, and you can see that at that point in time you're starting to talk about pressing up against the 140 mark. So currently it looks like the euro dollar wants to rally. The world stock markets are rallying and such, and that's not a huge surprise. The real thing, though, about this is that this will keep a credit crisis from happening in Europe, but all of the problems are still there as far as the sovereign debt risk and stuff. So, did it really change anything? It took one possible scenario off the table, but the problems are still there. So what I'm watching is I'm watching this 4-hour candle, and you can see we gave back half of it. And as I zoom in a little bit more, on the hourly chart, you can see exactly what happened. That 1 hour we just shot straight up, and the first significant amount of resistance that we ran into, we just fell. We are trying to pull back up, and I wouldn't expect this to just shoot straight through 140 anyways. But what this does set up for me, at least, is I'm going to watch the afternoon. If we start to fall again, it looks like this pair is going to roll back over and go to 135. If we rise, I'm not willing to buy because 140 is just above, and I truly believe that 140 will be a very pivotal moment in this currency pair. If we can rise up to that area and perhaps get an exhaustive candle, I think that sets up quite nicely for some shorts because let's face it, it only takes one random rumor out of Europe to sell this currency pair off. Also, you have to keep in mind that even though we've pulled back quite nicely, that's the 38, and the 50% retrace from the fall is right at 140. So 140 sets up to be more and more interesting as time goes along. So quite frankly, I'm selling if we break back through the bottom of this bar, It just shows that we just really can't rally. And I'm selling if we get up to 140 and show any signs of weakness. Either way, I'm selling. I'm not buying, and that's pretty much the point of this video. So that's kind of a midday update, September 15th on the euro dollar. Something to keep an eye on. I believe that good trades are ahead. It's just a matter of being patient. If you bought into the knee-jerk reaction, if you got out quickly, you might have made money. But these knee-jerk reactions are really dangerous to get involved with, and the fact that we gave back half of our gains shows just that. So we'll see how this plays out, but this is on my radar. Thanks, guys. Got any questions? Email me, Chris at thetraderguy.com.